This is Andrew Stotz of Stotz Investment Research talking about Indian banks, and what I see is they are struggling right now. Let's go through some of this. The first is that loan growth slowed globally. India has experienced the same. So I've aggregated all the data of all the banks in the world, and that's the red line, the global line. And then I've aggregated all the data of the banks in China and all the data of the banks in India. And from that, we can get a picture of what's been happening. We can see net loan growth, in this case, that's what we're talking about, has trended downward since the rebound in 2009 after the global financial crisis. China has had the highest growth most years, and Indian and global banks experienced a flat 2015. Only the crisis year, 2008, was worse for India. Let's look at net interest margin, and we can see net interest margins are falling in China, and there's a slight rise in India. That's important to remember that key increase is going to be valuable as we look at the level of provisioning that's happening in Indian banks. So banks in the largest emerging countries, India and China, have much higher net interest margins than the global banks. This core profitability has started to fall in China and rise in India. But here's where it gets painful for India. The P&L provisioning for Indian banks has increased massively. This is the amount of provisioning they're doing in their P&L as a percent of the average net loans that they have outstanding. So about 3% of average net loans, or 300 basis points. So while provisioning has been flattish globally since 2013, it has increased in China and India ever since. Provisioning began to increase massively in India in 2015 following the government's attempt to deal with legacy issues in the banking industry. The Reserve Bank of India has forced Indian banks to recognize more of its non-performing loans. So let's look at that P&L provisioning among Indian banks compared to other banks in Asia. So again, I've looked at all the banks across the world, so I've aggregated the banks in Indonesia, Thailand, Taiwan, and such. And we can see that provisioning of about 300% or 300 basis points or 3 percentage points relative to net loans is the highest in India. In fact, provisioning in India has recently been more than 2 times higher than all other countries except Indonesia. A challenge for the government is that state banks sit on almost 90% of system's bad loans as of first half 2016. Indian GDP slowed in the third quarter of 2016 and could continue to slow as the government is likely to take most of the hit, the government banks. Now, obviously, demonetization is something that's slowing and pressuring banks as far as administrative costs, too. So Indian banks' profitability is hit by this level of provisioning. If we look at return on equity, we can see the ROE of global banks has been stable since the recovery after the global financial crisis. Chinese banks' profitability has fallen since 2011, but is still significantly higher than the world. And Indian banks were hit by provisioning, which is causing this ROE to fall below 10% for the first time during this period. So if we look at that ROE, we can compare across the region, and what we see is that Indian banks have the poorest ROE in Asia by far. Now, of course, that can bounce back if provisions can bounce back, but if the situation is rough for Indian banks over the next couple of years, that provisioning may need to stay high. So Indian banks' ROEs are almost half of the second lowest country, Korea, at only 4%. Ouch. Chinese banks are still delivering a strong ROE of 15%. So let's also look at this ROA. So Indian banks' profitability has been hit by bad loan recognition. I just wanted to look at ROA for a second because sometimes ROE can be distorted if the equity base is very, very low. So what we can see from this is ROA of Indian banks was above the Chinese banks in 2009, but has fallen ever since. And when Indian banks were forced to recognize more non-performing loans, the provisioning led to a worse ROA than the global average for the first time in this time period. So basically, ROA has been deteriorating and recently has been deteriorating a lot thanks to the provisioning. Now, if we look at Tier 1 capital, Indian and Chinese banks have lower Tier 1 capital than global banks, right? And global Tier 1 capital ratio has increased after the global financial crisis following the Basel III, where minimum Tier 1 capital was set at 6%. So generally been increasing, although India's been flat. Indian and Chinese banks are above the minimum requirements, but below the global average. Did I say he? I meant the global average. Tier 1 capital improved in 2015 in contrast to other ratios for India. So they are building their capital base, despite the fact that provisioning is very high. So if we look at China and India have among the lowest Tier 1 capital ratios in Asia. Most Asian country banks have a Tier 1 capital in line with or above the global average. India and China are exceptions together with Taiwan and Korea. This is, of course, part of the history of the banking crisis from 1997. There's still plenty of management around that remember that banking crisis, including myself. I was a bank analyst in Thailand at the time. So China has a low ratio of non-performing loans. Of course, we can doubt and question that number based upon what disclosures we get, whether that's in China or India or any other country in the world. China has a low ratio of non-performing loans, less than half of the global average until recently when NPLs decreased globally but increased in China. India has seen a low NPL to net loans around 2% prior to the recent recognition of bad loans, and it was above 10% in the past 12 months. So the NPL ratio is quite high now in India. And what we saw in banking crises around the region and around the world is that starts off, pretty quickly, and it can snowball. So it's possible that NPLs as a percent of net loans could rise further from here for Indian banks. It just depends on how deeply painful the economy is and has been over the last couple of years. In Thailand, the non-performing loans moved to 55% at the peak, which was pretty much the highest of all banking crises globally. That was in about 1998 or 1999 that it hit that peak. So let's look at Indian banks, that NPL ratio relative to all the other banks, and we can see Indian banks have the largest rate of non-performing loans by far. India's high NPLs to net loans ratio isn't seen in the rest of Asia. Most Asian banks' ratios sit around 2 or less. Thailand and Indonesia are a bit higher. Of course, again, we can question whether the countries, such as China as an example, whether that NPL ratio number is real. One of the questions is if companies start to face problems, can they delay payment? Will the bank eventually get payment? Would the government provide support so that payment comes through? Many, many questions that we can ask. But we can see, obviously, that Indian banks are struggling right now. Want more? Well, sign up for our free newsletter and get instant access to more investment knowledge. It's at becomeabetterinvestor.net/join, and I'll see you there.